everyone. Welcome to this wonderful evening. I hope everyone's staying warm. It is a bit chilly, and Eskom is not doing us any justice. But thank you all. We're having a Section 12J webinar on a qualifying company. Dr. Pillay will be speaking to us on a medical side of this business, and Chris Hart will be telling us how you can invest your taxes in this qualifying company. So, Dr. Pillay, you're more than welcome to start, and you can get going.
Okay, excellent. Thanks very much. So yes, thanks everybody for joining us. It's very heartening to see a number of familiar names on the guest list, some personal friends and people that I have personal relationships with, which makes me feel very honored that you guys are sharing this time with us and giving us the opportunity to make you affair with some of the developments in our business, which a lot of you are familiar with. So we're going to be talking about, there's basically two parts to our presentation. The first part, we'll talk about Section 12J, which some of you might know about and some of you might know a lot about, and others might know absolutely nothing about. So I'm going to base my presentation pitched at a level where I'm going to assume that people don't know much about 12J. And then I'll also tell you a little bit about our clinics and what we're doing and how you can get involved through using your taxes to become a shareholder in our clinics in across South Africa. So coming to Section 12J or S12J, which is the shortened form of it, it's essentially, it's a section of the tax law that wasn't very well known until the last few months, until it's now almost too late to know about it. But nevertheless, there's still time. And those who act fast, you know, could potentially still be part of this great initiative that SARS started in 2008. The spirit of 12J was basically envisaged to grow the South African economy and to allow everyday taxpayers to be able to participate in helping to grow the South African economy. So what that essentially means is if you're a taxpayer, which hopefully all of us here on this call should be paying something towards our government's coffers, you and I and everybody else has the opportunity to help grow the South African economy by supporting small and medium businesses through utilizing your tax benefits in the 12J venture capitalist company. So how that essentially translates is if you're earning money and you're paying tax, you can potentially invest into a 12J VCC and the full tax benefit of that comes back to you. So in real terms, what that essentially means is if you're in a tax bracket of, let's, for argument's sake, say 40%, if you put in R1 into a 12J VCC, SARS will give you 40 cents back on that rand. So it sounds pretty good, but there were some snags. And the reason why 12J wasn't taken up as, you know, prolifically as it could have been were for several reasons, and I'll touch on those in a little bit in the next few slides. So if you want to think about 12J, it's essentially a pre-tax deduction which reduces your taxable income by the amount that you would invest into the 12J. And the simplest way to understand it is if you think about your pension fund. If you put money into a pension fund, SARS then gives you back the taxable portion of that pension fund, as they would write that off as your contribution or their contribution to your pension fund. So the 12J calculation would work exactly the same as your pension fund. So this was envisaged by Trevor Manuel and Praveen Gordon in 2008. And when they came up with the scheme, it wasn't brand new because actually this type of tax deduction or tax break, if you want to call it that, exists in the UK and in Australia. And so it wasn't something completely new to South Africa, but it's a great mechanism to allow the everyday taxpayer to be able to contribute to help grow the economy of those countries. So when the tax law was passed in 2008, they also put in a clause that said that in 2021, 30th of June, this will come up for review and a sunset period would set in unless the Minister of Finance decides to continue it. Unfortunately, we had COVID last year, and that dried up our coffers in SARS coffers. And if you want to think about it, S12J is almost delayed gratification to SARS because by investing in the economy, we create more employment, we create more VAT, we create more PAYE, but that money only comes through to SARS over a longer period of time. And currently what's happened with COVID, all the tax money is dried up, or the country's finances have dried up. So they're obviously looking for instant gratification now, and they want the taxes coming back to them. So if you look at how the tax is distributed amongst our country, these are old stats, but it kind of filters through to the current times. The majority of tax is paid in the middle and lower income sectors of the tax-paying community in terms of volume. So what SARS was trying to do was to encourage people to utilize these taxes to invest back in the South African economy and not take their money offshore. So the traditional sort of investment in a 12J would work as this slide is portraying. And what you would see is on the left-hand side, there's a blue and orange circle with a triangle pointing into the VCC. So in that blue and orange circle is you, me, and every other taxpayer in South Africa. If we wanted to invest in a 12J, what we would do is take some money that we had and put it into a 12J VCC, and that the VCC then, which is a highly vetted and highly regulated venture capitalist company, would then utilize your taxes to invest in small and medium businesses in South Africa. And by virtue of that investment, you then would get a benefit of having an equity stake in those small businesses, and you'd get a share and dividend out of that. Those shares and dividends would flow through as a normal company would, and you'd get the benefit of having SARS contribute to your investment in that 12J VCC and the qualifying company. So in essence, what it would mean is if you were, for hypothetical reasons, in a 40% tax bracket, if you put in R1 million in a 12J VCC, 600,000 Rand of that million would come out of your pocket, and 400,000 would be money that you would have paid to SARS. So it was, a nice gesture from SARS, but it wasn't well taken up because there's quite a lot of rules around how you can invest and how you can manage your money in 12J. So the first 6 or 7 years, there weren't many qualifying companies around that 12J VCCs could invest in. And the reality was that most of these qualifying companies were not really slam dunk investments. So most people didn't really want to take 600,000 Rand of their own money and put it at risk into a business which they weren't really sure whether they were going to get a return on. And plus, some of the rules of 12J meant that you had to keep your money invested for 5 years, and that money was locked up. And people were, well, I'd rather put that money into some, other investment where there's a faster route on their ROI, as opposed to putting it into a 12J structure. And for many years, there wasn't much traction in 12J until around about 2016, 2017, when some new models on 12J were envisaged by smart people like Chris Hart. And when I get to the current form of how we utilizing the 12J, it's so simplistically brilliant that it sounds almost too good to be true. But traditionally, the drawback on putting money into a 12J was such that your money was encumbered for 5 years. You weren't able to access that money, and you were putting, a large portion of your investment just to get, 40 cents back on every Rand from SARS. So most people opted not to invest in 12J, and 12J never really gained the traction that it was envisaged to gain. So these are some of the things that I've already alluded to in terms of the risk on 12J VCCs and qualifying companies, and the liquidity risk in having your money tied up for 5 years. And there's several other drawbacks that were kind of, not attractive to people investing in 12J structures. So what's happened now is with Impact Africa's, let's call it secret sauce, in terms of how they are administrating their VCC, it's really become a game changer, because what it's doing is it's taking away the risk from us as taxpayers in order to invest into VCCs by allowing us to let's say reverse engineer the process of calculating this deduction. So anybody who's paying tax currently, whatever tax you're paying to SARS, whether it's 100,000 or 1 million or 500,000 Rand for that particular tax year, we would then say to the taxpayer, instead of paying that money to SARS, we can then take that full amount of tax and reduce your taxable income to zero by putting in a collateral investment on your behalf into the VCC. So how that essentially would work is portrayed on this slide. So if we went back to the previous example of R1 million investment, 600,000 Rand would come out of your pocket, which is capital that you would have at risk, and 400,000 would be coming from SARS. Now that 600,000 Rand doesn't necessarily need to come out of your actual capital. You could go and borrow that money from your uncle, you could come to me, or you could go to Chris Hart and his company and borrow the money from one of those people. Or you could have money sitting around in a money market and you wanted to use that money. But the easiest way not to have any risk to you is to get the money from somewhere where you don't necessarily have to pay it back from your own capital. And we'll go into a little bit more detail on how that works in a second. But essentially, what the structure does is it allows you to unlock the money that you were paying to SARS and get that money back from SARS in equity or in a share stake in the qualifying company, which in this case is our medical businesses, which we're building across the country. So I just want to say at this point, it took me around 6 months to understand this properly. So if the penny isn't dropping completely just yet, don't feel alone. You're probably in the same place I was, when I first heard about this. So essentially, just to reiterate where I'm coming from, what we're doing is we're taking this whole calculation and we reverse engineering it. So we're saying to you, and what we're doing with all of our taxpayers is saying, if you're paying any tax to SARS, that's the amount of money that would come into the VCC on your behalf. But in order for us to get that money out of SARS, we need to show SARS that you've made an investment to the portion of which would allow us to get that money back from SARS. And that would be a calculation based on your taxable income and reducing your taxable income to zero. So let me give you an example. If you earned R1 million in this financial year, and you put R1 million into your pension fund, your effective earnings are zero because your taxable income from your earnings is now being reduced by your full tax deduction of your pension fund. So in essence, then you would get 400,000 Rand back from SARS because you've invested all your money into your pension. Now that's almost impossible to do because you need to live and you need to pay your other expenses. But for all intents and purposes, that is how that calculation would work. So the 12J would do the same. And so in terms of working with your tax advisor, we would then calculate what your taxable income would be at the end of February 2022 and say to you, this is what we would advise you to invest, and the rest of the portion, which would have come out of your own pocket, the Impact family of companies would essentially front for you. So there's a graphical representation of what this means. It essentially, the nuts and bolts of this essentially means that there's no capital coming out of your pocket. It's only the taxes that you would have paid. Now, there's some technicalities around this, which is enshrined in the agreements that you would be receiving if you're interested in getting involved. And one of the technicalities is that the law is quite clear that a taxpayer has to have some money at risk in a VCC. So what Chris Hart and Impact have done is they've made a 20,000 Rand deposit, which is your at-risk portion. So for R1 million or 2 million Rand investment through your personal taxes or 5 million Rand through your company taxes, all you're risking is 20,000 Rand. And we'll talk about the scenarios in which way you could potentially lose that 20,000 Rand. So how 12J is structured is your money is tied up for 5 years. Essentially, it's not really your money. It's SARS's money, and it's the money that we're lending you in inverted commas to unlock that money. So if you were to pay the money to SARS, that's it, it's gone. And you hopefully would get some of that money in services through the economy. But for all intents and purposes, you've paid that money to SARS and that's it, it's goodbye. In the 12J structure, you receive an investment in the Impact VCC, and then that impact VCC invests into the SCIN Med business, and you would then receive the dividends out of the SCIN Med business via impact in the first 4 years, should there be dividends paid. At year 4, a decision needs to be made, whether you want to remain invested in the SCIN business or you want to exit. And if you do decide you want to exit, what then happens is whatever capital you invested initially, you get that capital back tax-free, and the capital gains on the growth portion would only be the tax that you would pay on that. And then you could either keep your shares in the SCIN Med business, or you can exit and have your taxes that you would have paid to SARS come back to you at that point in time. So that's essentially how 12J works. It's been a highly positive and successful model for many companies in South Africa over the last 4 or 5 years. Once it's gained traction, it's quite a pity that it's now coming to an end at the 30th of June. But there's still time for people to invest, and it would be all the taxes that you would be paying up until February 2022. Now, just to move along a little bit, and we can go into some of the minutiae around 12J in a moment with your questions and answers. I just want to quickly tell you about the underlying investment that you would be investing in, and that is the SCIN Med business, which is an acronym for the Specialist Laser and Cosmetic Institute. Now, SCIN Med is a medical administration company, which essentially is fixing several problems that exist for doctors in the medical world and in the world of plastic surgery, dermatology, aesthetics, and cosmetic medicine. So if you think about a medical specialist, whether it's a plastic surgeon, dermatologist, urologist, or any specialist, and even every professional that studies to become a professional, they essentially spend the majority of their adult life learning how to become a doctor. And that takes tremendous personal sacrifice, years and years of studying. And, on average, it takes about 15 years post high school to become a specialist. And these people acquire very specialized skills, which not many people have. But the problem is the day they graduate from medical school, voila, they become a business person. And unfortunately, with due respect to doctors, we're not business people. We're not business minded. We haven't been schooled in business, and we don't understand the precepts of big business. But essentially what happens is we have to start our own practices. We have to start finding ways to finance those practices. We have to find ways to equip those practices. Then we need to find ways to manage those practices. And that comes with staff management, lease management, finance agreements, buying equipment, putting in policies, understanding what software to put in, dealing with medical aids. The list goes on and on and on. So it's a cesspool of, difficulty that specialists have in order to become successful in practicing what they've learned. And the sad reality is that a lot of good doctors are not successful in practice because, they don't have the tools to make themselves successful just because they don't have the resources or the capital to compete with the other practitioners who are better resourced, who have better marketing, or whatever the case might be. So SCIN Med is basically building bespoke medical aesthetic clinics for plastic surgeons and dermatologists around the country. We believe that the next wave of development in the medical world for plastic surgery and dermatology will be in bespoke medical clinics, as we're seeing a shift for surgical procedures from big hospitals into what we call ambulatory care day hospitals. That shift has been happening over the last 5 years. And now with Discovery Health and all the other big funders pushing patients to have their surgeries in these day clinics, we're going to see the same thing happening with plastic surgery and dermatology. And the reason for that is the majority of patients that we see as plastic surgeons and dermatologists are healthy. They're not sick. They don't want to go to a Mediclinic or a Life or a Netcare to see a plastic surgeon or a dermatologist to have their Botox or whatever other minor procedure they're going to have. And COVID has also accelerated that shift. So as a plastic surgeon and a dermatologist, if you're still practicing in the traditional sense where you have rooms in a hospital, sadly, you will get left behind because this is where patients are seeking out to have their treatment. So SCIN is the first company in South Africa, and this model is not rocket science. It's basically built around economies of scale and practicing in groups, which is the most effective and efficient way to do medical business in the future. And we've seen this model in Europe and in the US, where a group of practitioners come together so that they can share resources. We use highly specialized equipment and highly specialized staff, and it's not economically viable for one specialist to have one laser. And if you look at pathology and radiology, they've had to do this several years ago, because as a young pathologist coming out of medical school, it's not economically viable for you to set up a medical pathology lab. Unless you've got a rich uncle or a strong network of colleagues that are going to support you, you'll never be able to pay for all the capex or the equipment, the capital equipment that you need as a single practitioner, because you're using it for 1 or 2 days of the week, and the other 3 days it's lying, without being utilized. Whereas if you put 3 or 4 practitioners together, you share these resources, the economies of scale kick in, and you start getting a better return on investment and a better bottom line. So we see this already in other specialities, and with plastic surgery and dermatology also needing now specialized equipment, scanners, lasers, and so forth, we're going to see a transition into this type of medical practices going forward. So we're literally at the cusp, at the cutting edge of this wave, and you as an investor will be able to see the benefit of that moving forward. This is just a graphic of one of our clinics in Cape Town. And so in conjunction with medical procedures and consultations, SCIN also offers aesthetic and spa treatments, which allows us to cast our net wide and bring in customers from a diverse background in order to be able to cross-sell and upsell those clients into our more high-end therapies. So the investment here is in high-end medical aesthetic clinics. As you can see, the quality of these are actual pictures of our clinics and some of the equipment that we have, which each of these laser machines are in the region of about 2 million Rand. So the investment into these clinics have already been quite onerous, and the return on these capital equipment is already starting to show from the clinics that we have in South Africa already. But what we're essentially fixing is 2 value propositions, one for doctors and one for clients. We're building a brand which clients can trust, where they're seeing specialist medical practitioners, not people dabbling in this area. These medical clinics and laser clinics are popping up like on every corner, like 7-Elevens. And the sad reality is, how you as a customer, how do you know which one of these clinics are reputable, whether they have good equipment, well-trained staff, and they know what they're doing. So if you walk into a Woolies, you understand what the brand means, what it stands for, what product quality of product you're getting, and what after sales you're going to get. With SCIN, we only work with specialist plastic surgeons and specialist dermatologists. And so our clients know that they're coming to see people who are fully engaged in making sure that they're spending money in a place where they're going to get the best bang for their buck. As a plastic surgeon, I sit and see patients day in and day out. And, I see people on various ends of the spectrum. On one end of the spectrum, I see people that have had procedures that have caused them to be maimed and botched. And then on the other end of the spectrum, I see people who spend thousands and thousands of rands and they've got no result for the money that they've spent. So both of those scenarios are not, desirable. And so as SCIN, what we're doing is we're building an industry benchmark, which is a market leader first to market. And we want to make sure that all of our clients have a consistent experience across all of our clinics, which is, again, why we're working with doctors. The value proposition to our medical specialists is that we want our doctors and basically our partners, they don't work for SCIN, they work for themselves. It's their businesses. We just run it for them and help them to be unbridled from the administrative burden of having to run a business and manage a medical practice. So in essence, by being unburdened from all the guesswork of having to start a practice, run a practice, manage staff, buy equipment, and deal with all the other myriad of complexities of running a business, we allow our specialists to become better specialists and to hone their skills and sharpen their sword and become better, let's rather say scalpel than sword, but to become, better at doing what they do best and to practice the skills that they've spent many man hours learning and made major personal sacrifices to get to that point. So this is our team. We've got a corporate team which is highly capable with more than 15 years of experience in this industry of building clinics. We are constantly, skilling our team and growing this team. So this is where we currently are. Some of the people here you might know. Some of the people are on this call. And so, yeah, I've already alluded to some of the things that I'm mentioning in the next few slides. But basically, these are some of the problems we're fixing in terms of, I always say to our team, we've got two customers. Our one customer, our end users, and the other customers are our doctors. And the essential difference between SCIN and other types of businesses, nobody works for SCIN. SCIN works for the doctors and the clients. So ultimately, all the doctors that are part of SCIN are shareholders in SCIN, either through S12J or via direct investment. And it's their medical practice that we're helping to administrate in order for it to be the most efficient type of business where the economies of scale kick in, better buying power, better marketing power, all translates to better ROI. So here's some of the things that give most new young doctors a headache when they're starting a practice. I've already spoken a lot about these things. And so by centralizing all of this, again, we create critical mass and economies of scale, and that translates into better business with better bottom lines for everybody invested in these clinics and the doctors themselves. I mentioned already some of the sort of qualifying criteria that we have to be experts in this area. We've run these clinics for more than a decade. We've won numerous awards locally and internationally. So we are well placed to take this business, and be the right jockey for it to be successful. This slide just again repeats a lot of the things that I've mentioned. And again, on the patient side, I mentioned those value propositions of, making sure that you're seeing a doctor and a therapist who's well-trained, that knows what they're doing with the equipment that they're using, which is top-notch, world-class equipment. So lastly, in terms of the 12J structure, I already spoke about all of these points that I have on the slide, so I'm going to go through that one. And we've mentioned the examples of how the investment would work. And so this slide, again, just goes through all of those aspects, and we can go into the details of that. If people have specific questions, we'll come back to these examples in a moment. So the business model, again, we've got SCIN Holdings, which is the VCC or the qualifying company that's sitting on top, which each of you have the opportunity to invest in. And then SCIN Holdings then invests into each of the branches, which would be around the country. And currently we've got Cape Town and Hyde Park. We're in talks of opening another center in Cape Town. We're quite far down the line with negotiating that one with 2 theaters. We're also in talks with a group in Joburg and Durban. So we're quite far down the line in fleshing out the business model. We've got a proof of concept already, and we're now ready to execute utilizing the investment that you would bring on board. This is just some of the financials, and this will be available for anybody that wants to have a look at it. I'm not going to go into all of these minor details. Well, they're not minor details, they're major details, but it might be a bit too much to discuss right at this point in time, and we can share all of this with you. But what we're basically showing you here is that we have a very profitable business, and we're looking at ROIs in the region of around 20% through the S12J, and that could only grow in time as we build the economies of scale. So I'm going to skip through these slides. In terms of the investment process, I'll let Chris Hart deal with that. And it's quite simple. It's basically signing an offer to commit to invest, and then paying your deposit before the 30th of June to be able to, the slide is, sorry, it's an old one. It was for 2021 tax year, but for 2022 tax year, it would be the 30th of June. That's the cutoff date when S12J ends forever, sadly. It's a pity because it's a very innovative tool that we would have used to help young doctors to enter into private practice without having to risk capital. But sadly, we'll have to look for other mechanisms now that S12J is ending. And then this just takes you through the life cycle of how your engagement with the VCC and SCIN Med would be. And we can go into those details should you be interested. I hope I was quite succinct in bringing the message across. As I said, there's quite a lot of technical detail that goes along with this, which we'd be very happy to engage with you on a personal level to make you understand. But this was just an overview, a very high helicopter view, high-level view of how the S12J structures work. So I'm going to let Chris Hart take over. If there's anything that I've missed, Chris, that you want to add, and then we can go into questions if necessary.
No, thank you very much. From my side, you've actually covered most of what I need to cover. So I'm just going to reiterate that what we're doing is that we are effectively taking our taxes and then making it an investment. So that's the first short circuit that people have, in their head, is that you can actually take your own taxes and invest it. And the second is that we do it via a geared structure, and that geared structure means that one takes out a loan. The loan has to conform with SARS's regulation and compliance. But we in how we actually manage it and execute it, if you like, we do take a lot of the risk away. So as you said, the deadline for this tax year is the 30th of June. There is a securing deposit that does need to be paid and that's partly to prove that we did do the investment in this, within the deadline. And that is actually quite important. We've got an additional presentation that we will send to you, which it covers a lot of what we said, but just with different graphics. It just helps you maybe to understand it from a different angle. I think what we need to do is really open the floor to any questions if people have, and we're happy to take questions. As I say, the first.
Chris, there's a question there from
yes.
Daryl.
Daryl, yes.
Hi, Chris. Hi, Kamran. Thanks a lot for the information. Sorry, I've got quite a few questions. So I couldn't fully understand the whole cash flow schedule, if you could put it that way. So you need to put down a deposit, and do I understand that the rest of the amount is issued as a loan by which entity?
That's correct. It's by Impact Cash Management Funds Pty Limited. So that initiates the loan, right? The actual securing deposit doesn't form part of the investment, but it forms part of the collateral for the loan. The loan then gives rise to the investment, which entitles you then to reclaim your taxes again, for the amount, not of the loan, but what the reduction of income, because the loan amount is a deduction from your income tax. So that gives rise to a refund, which then gets used to pay down the loan, right? That starts to monetize everything. The loan is written as a zero interest rate loan because while you're investing it in the venture capital company, we're not taking risk on that loan. It's only when we pass it into the actual qualifying company, which is the SCIN investment that we've been talking about, that we monetize the loan there, and that we write the loan off. No, we don't write the loan off. We write it as a limited collateral loan. So in other words, it's the collateral that we specify within the loan agreement that is the limit to what we can actually it's the limit to what we can let everything go wrong. All right. and then that's the important thing. And then from there, right, we hold that. We try and grow your capital portion, which is the non-loan portion, and that's what you receive back from SARS. We then try and grow that and give you a return on that investment.
Okay, thanks. And then in terms of the fees, is there maybe
Daryl,
a description of the fees? Is there initial capital raising fee, annual management fees?
There are all of that. Yes, there are. We are. I think from Tristan's point of view, we are out of time.